My name is Mutsa Chironga from McKinsey & Company. I spoke this morning at the USB LeadersAngle about our report Lines on the Move, the progress and potential of African economies. The talk focused on the growth opportunities for African economies and the business opportunities available for corporations and investors. An edited version of the presentation follows. In terms of Lines on the Move, there are really four key messages that the report addressed. And those four key messages were Africa's growth is not just about resources. In fact, only about 32%, even including government multipliers, or 24% if you're just thinking about the sector contribution, of Africa's recent growth is attributable to resources. Secondly, looking forward, the continent's long-term growth prospects, in our perspective, are strong. These growth opportunities and challenges, yes, there are challenges, vary by country and by region. And we've given some thought to how people can think about how those opportunities and challenges vary by different country types. And finally, the magnitude of the overall business opportunity is significant. So about $2.6 trillion in revenue opportunity by 2020 across 4 industry types, which is about $1 trillion more than we are seeing today. Okay, so first thing, what that happened in the 2000s, Africa's growth really accelerated dramatically. It averaged about 4.9% between 2000 and 2008, and that made Africa the 3rd fastest growing region in the world after the Middle East and Asia. This growth acceleration, when we looked at it, it was very widespread. So this chart shows 30 of Africa's largest economies. Between them, they're about 97% of Africa's GDP, so this is in effect the African economy to a large degree. What you also see is all the countries on the chart, the dark blue charts are the growth in the 2000s. All the top 30 economies grew on average as well. So everybody's growing, and 27 out of the 30 top countries in Africa accelerated their growth in the 2000s, so a very widespread change. Large and significant amounts of growth came from other sectors like wholesale and retail, agriculture, manufacturing, and so forth. And pretty impressive growth rates, those numbers in the bubbles, in sectors such as tourism, banking, finance, and so forth. A second what we call driver of the growth in our perspective is the fact that Africa became a much more stable place. So this shows the macroeconomic side of that stability. So we had lower inflation, we had lower government debt, we had smaller budget deficits on average across African countries. Political stability improved tremendously as well. The rate of conflict halved essentially in the 2000s. And so both this macroeconomic stability and this improved political stability obviously made for a more conducive investment and business environment. In the sample where data was available, we see between 50 and 84% of African countries enacted some type of pro-business reform in these categories of regulation covered here, credit regulation and so forth. So there's many countries that have gone through a very dramatic improvement in their business environment. And what we see on the far side there is that those countries actually accelerated their growth faster than the countries that didn't. So if you're a reformer, you actually see your growth improving faster than if you're not a reformer. The 2000s were the first time in a couple of decades that productivity growth actually became significantly positive on the African continent. So productivity growth of 2.7%. This productivity growth, what you find is it's very consistent, first of all, across countries. When you look across a wide set of countries, you see this pattern. And also, if you look across sectors, you see productivity growth picking up in the 2000s across sectors. Another feature of the growth that is important and is helpful for Africa in terms of diversifying where the growth is coming from is really the rise of the emerging markets. Asia, you see, rising particularly strongly in that mix, and a lot less dependence on Western Europe and North America to a degree than, say, at the beginning of the 1990s. In terms of looking forwards, there's four things that we think are important. Firstly, there's the global race for commodities. In this example here, we cite oil, projected to grow its demand globally at almost 2.5% per annum going forwards. You'll see similar projections for things like coal and iron, which are important exports of the continent. Access to international capital. We'll talk in a minute about how really the floodgates of the international capital markets have opened for Africa. Seismic demographic shifts. We're seeing the rise of a significant consuming class in Africa, the rise of a very large working age population, and we're seeing a large surge in urbanization, which tends to be accompanied by people moving into higher productivity occupations. The last one is the idea of a possible green revolution. The projections for demand for foodstuffs it's projected to grow between 30 and 100% by 2050, depending on which region of the world you're considering. Some regions have higher demand for food projected than others. So in Africa, traditionally seen as a donor continent or a place for poverty reduction, in addition, became a place for business. And private capital started flowing into this continent at unprecedented rates, the red line at the top there. When we looked at the rates of return on investment in Africa, we see that for the first time at the end of the 2000s, they became higher than in any other emerging market region of the world. In terms of demographics, the rise of the middle class that I spoke about. So by 2020, about half of Africa's households will be significant consumers of non-food items. Right? So we'll have an household income of above $5,000 per capita. This chart shows that Africa's more urbanized than India by quite some margin. So Africa's at 40%, India's at 30%. And Africa's not much less urbanized than China. There's a startling number of cities, 52 cities with more than 1 million people across the continent, which is as many as there are in Europe. In terms of agriculture, I spoke a little bit about the growing world food demand. What Africa has is about 60% of the world's arable land. Agriculture is starting to come back onto the radar screen as a viable opportunity. Okay, so in terms of how we think about the different countries on the continent, so there are essentially 4 groups of countries we've identified. So on this page are the larger economies in Africa, also the economies that were growing positively in the period that we looked at. The 4 groups are, starting in the top right, the diversified economies. So on this axis is economic diversification. So your share of manufacturing and services is a share of GDP. On the vertical axis is your exports per capita. In terms of that export competitiveness question, they are growing their exports at much lower rates than comparable countries around the world, such as your Malaysias, your Brazils, and so forth. That group is about 40% or just under 40% of Africa's GDP. The other, second big group is the oil exporters. Something like 1.4 trillion in oil exports received over that time by these guys. They used a lot of that to build up their government reserves. The 2 challenges that this group faces for the most part are, one, leveraging that oil bounty for infrastructure development, and secondly, clearly diversifying, so moving, towards the right-hand side of this chart. They're kind of stuck at, lots of money, but nothing much else going on apart from oil. The third group of interest is what we call the transition economies, and we are actually pretty excited about these economies. So they're transition because obviously they're starting the path towards diversification. So if you look at the East African community, Tanzania, Kenya, Uganda, the amount of intra-regional manufacturing trade has increased dramatically. The pre-transition economies, the likes of DRC, Ethiopia, and so forth, these countries in particular experienced really rapid growth. in the 2000s. So sometimes growth rates of 7, 8, 9%, which is really remarkable. But that was great for the 2000s. When you look in the 1990s, some of these countries had zero or negative growth. For Uganda, Kenya, Tanzania, the share of manufacturing in their export basket has increased dramatically since 2000. And the share of it that's going regionally is about 65–70%. So it's very much intra-regional trade, which is spurring manufacturing exports in these countries. Moving on to business opportunities. Across the continent, there's 4 categories of industries that we think will be large business opportunities going forwards, totaling about $2.6 trillion in revenue opportunity, as I mentioned earlier. And those industries are consumer-facing, resources, agriculture, and infrastructure. So consumption in Africa actually grew faster than it did in Brazil and India in the last 10 years. And the absolute size of the consumer market, you can see here, is bigger than in both Russia and India. Admittedly, this is comparing a continent with countries, so it's not like on like, but it just helps people to get a sense of what kind of magnitude are we talking about here. In terms of the specific location of these opportunities, there on the consumer side I'm talking about, there's what we call a large number of like consumption megacities, and they're the ones you'd expect. So the 2 big ones in South Africa, Lagos, Egypt, and so forth. The continent is just flooded with cities that are important growth and consumption nodes. We talked about agriculture, and we said, will that happen or will it not? We don't know. There might be a green revolution, there might not be a green revolution. But if it was to happen, we believe it will be significant. So firstly, there's a lot of uncultivated land, and we think that opportunity alone is, by 2030, is just north of 200 billion or so in additional opportunities from cultivating that land. Yield growth. So in maize, for example, Africa is at less than half of the global average of yield for obvious reasons. A lot of the farmers, certainly north of the Limpopo, are not really using seed and fertilizer to a great degree. And also shifting to higher value crops. So if all those 3 things come together, we believe there's at least an $880 billion revenue opportunity in Africa. In the cultivation space, we think horticulture will be the biggest, primarily because it's such a high value product. And then upstream, not so big in terms of numbers, but the margins on the upstream activities of fertilizer, pesticide, and so forth tend to be very high. In terms of infrastructure, so about $72 billion of infrastructure happening across the continent at the moment. Roughly similar sizes of transport, energy, and telecom infrastructure investment, so 20–25 billion in that range. You see that telecoms has really shot up from like 1% penetration to 37% penetration across the continent, whereas power and water in this case have not grown much. They've really stalled where they were in 2000. And then finally, resources. So this is the share of African production. If you take resources in their entirety. The reason we talk so much about oil exporters earlier on is that oil is really far and away the most important resource on this continent. 75% of all revenue from resources came from oil. And gas is 9%. So put those together and it's 85% or something like that. So all the rest of, all minerals are only the remaining 15%. In terms of where oil exports are going, so China has obviously been the fastest growing destination for African oil exports. In spite of that, China still remains only about 13% of Africa's oil exports. So there's still a lot of oil going to lots of other places, Europe, the US, and so forth. So I think that's it. If you want to download the report, it's available online. It's called Lines on the Move. It's available at the McKinsey Global Institute website. So thank you.